Welcome back. You're still tuned into Halftime Report. Well, Garware Technical Fibres, that's the stock on our radar today. The company speaks about a good second half of 25 and it has surged 21% this year so far. They also expect growth on account of continuing good demand in aquaculture segment from Chile and Norway. To discuss this more, we have Vayu Garware, Chairman and MD of Garware Technical Fibres, joining us now. Mr. Garware, good afternoon. Thank you so much for joining us. Well, you know, there's been a margin improvement that the company saw in Q4. It has been strong versus the peers as well. Can you give us a sense of how raw material prices are panning out and what is the margin picture that you're looking at in FY25?
Sure. Good afternoon. Thanks for having us on the program. Actually, if you look at a slightly longer timeline, up to COVID, we were growing very well. Post-COVID, we had a couple of years where we had some headwinds of some external issues in our sports business and aquaculture business in Norway. In 24, these are now behind us, and we have therefore been able to deliver a very good result in 24. We grew our profit before tax by almost 23%. We were also able to cross a key milestone for us of 200 crores profit after tax. This was partly with very good margin increase. So we actually grew our profit before tax margin by 3% points in 24. The demand outlook for 25 is also started very well. Our plants have been full through the first quarter and we continue to have full capacity utilization. So we're expecting a very good first half in 25 and the margin profile is expected to continue. Raw material is not a major concern for us because we do pass through maybe with a lag. Our pricing is much more around value proposition. So raw material is not a significant concern.
All right. You said that you are looking at a good first half. If you could, quantify what good first half means, because last year, if I look at your peers and you grew about 2% on the top line, whereas some of your peers actually fell, mid-single digits or even low teens for a couple of them. So what do you expect the industry to do in this year and how much will you beat the industry by?
Very honestly, we don't focus so much on top line. Our focus is a lot on the profit. And that's why I said our profit has grown by 23% or so. So we're very much on track on that. We look at continuing that even in 25. In the first half, it should be in a similar trajectory. On the top line, there have been some impacts. For example, a lot of our business, 60% of our business is overseas. So freight rates dropped a lot, which obviously is a pass-through to the customer, etc. So it impacts the top line numbers. So I mean, we don't track the top line as much as we do on the bottom line.
So what happens to the margin number then? Will you be able to maintain the levels that you saw in FY24 or will you see an improvement over those levels as well? Because you're talking about good demand, more addition of value-added products in your portfolio.
Yes, so we expect to continue the margin that we were able to deliver in 24 and with some improvement. There are two key focuses for us. One, of course, in our company, roughly 80% of our products are already value added. 20% are still commodity. And a key focus project for us is to improve that balance 20%, which is one of our key strategies. And that's working quite well so far. So we will expect over the next couple of years that we will further improve the margins a bit. So we do expect to maintain and improve from there.
So if, say, for instance, revenue is a function of, the prices, etc., and you don't focus on that as much, how should one look at your operational performance? Do we look at it as EBITDA per unit? And if you're looking at growth in this year, are you making some sort of metric of volume growth as well?
We do have, but part of our core strategy is also that we go on upgrading our customers. So sometimes that leads to cannibalization of our own product, but with a much better value-added product. So therefore, I say that as a strategy in our company, we don't look so much at top line and volume. We're finally trying to deliver to the bottom line, and we deliver a lot to our ROCE. So if you look at our return on invested capital, it's over 50% now, and that's what we really focus on.
Okay. You did indicate that export is a big part of your overall revenues. Norway, Chile, and Northern Europe is where you see a lot of demand coming in from. Is this expected to sustain? What is the export domestic mix right now? Are margins better in the export markets for you?
Yeah, our export domestic mix, we're about 60% export, 40% domestic. Overall, margins are similar. Our margins in some of the international markets are better than domestic. But internally, we have decided to refocus a bit on domestic. So our intention over the next 3 to 4 years is to bring domestic up. There's been some restructuring we've done internally to build a greater focus on domestic and particularly bringing some of the value-added solutions more into the domestic market. So, over the next many years, India is definitely going to be one of those countries that's growing, and we want to refocus on this market as well. So we will look to try and bring it back. Domestic will increase again from 40 maybe to 45+% over the next few years.
All right, so you'll increase your domestic contribution from 40 to 45%. I have to ask you this, and it's the time, right? We celebrate a lot of sport. Then we have the Paris Olympics, and yesterday there was a report that came in which suggested that we have seen a growth of 57% demand in turfs across India. So sport, which the last known number was close to around 15% of your overall revenues. How much is that right now? At what rate is it growing? What rate is it likely to grow at? Is that margin accretive?
Yes, it's very much. It's a high margin business for us. It has grown over the last 7 or 8 years at almost 15% CAGR. So it's consistently growing well for us. As I mentioned earlier, only in 22 and 23, we had some challenges, largely out of the US market, but that's over. And 24, we're back to very good growth on sports. We have not so far focused in Southern Europe and South America as much in sports. So those are the new markets we're focusing on that area, and that should further add to this growth rate. But
how much does it account for?
Key area. Sorry.
How much does it account for in your overall business?
It's close to 20% of our business now.
Okay. And are there any other capex plans that you have in any other new segments, or will you look at expanding the sports segment itself? What kind of plans in terms of expenditure do you have in FY25 or say 2 to 3 years down the line?
So we roughly invest in capex about 50 crores per year, and in 25 also we plan to do similar, maybe a little bit more. The demand has been very strong, so we will probably go a little bit ahead of that, but not significantly, maybe 60 crores or so. But that in our business, it's not a single line. We add machines as we require. It's more like a textile process, so we can add and debottleneck as we require. So roughly 50 to 60 crores is what we normally do, and that should be sufficient to keep it.
All right, and finally, before we let you go, any other category that you're looking at in terms of premiumization, growth, any sector which shows the makings of a big one for you?
I think geosynthetics is one of those. It's been a very strong last few years. Profit growths have been roughly about 40% per year over the last 3 years in geosynthetics. And it's a very high ROC business for us. So this is an area where there is a specialization. There's a lot of value addition in infrastructure through geosynthetics. And we are looking at both within India as our major market, but also outside. So we started export in this segment, and that's also growing right through Europe, South America, and Southeast Asia.
Okay, all right, Mr. Garware, it was a pleasure speaking with you. Thank you so much for joining us and giving us all the details. We'll touch base with you once again when Q1 numbers are reported as well. That's the word coming in from Garware Technical Fibres. They expect growth to continue and margins to improve in FY25 and looking at new segments as well. Time for a break now. Manish Hathi Ramani of Deen Dayal Investments will join in with some trading strategies on the other side. Stay tuned for that.